We treat taxes like this inevitable, frustrating chore, right? Like taking out the trash. But looking at Michele Cagan's Taxes 101, it's clear the tax code isn't just, a chore list.
Yeah, no, it's really more like the hidden source code of human civilization.
Exactly. So today, our mission is to dive into those sources. We want to figure out how the bizarre history of this system actually shapes the world you live in.
And to see that code in action, you really have to look at how early taxes were collected. I mean, it wasn't about swiping a card.
Right.
In ancient Mesoamerica, the Aztecs and Mayans valued chocolate so highly that cacao beans were literally currency. So you paid your taxes in chocolate.
I mean, I would absolutely support bringing that back.
Right. But it gets much stranger. Roman Emperor Nero created the vectigal urine, which was literally a urine tax.
Okay, wait. A urine tax. Why?
Well, urine was incredibly valuable in ancient Rome. It's rich in ammonia, which they needed for producing chemicals and cleaning togas.
Oh, wow. Gross, but okay.
Yeah, so people collected it from public toilets to sell, and Nero saw a booming trade and just decided the empire needed a cut.
So they taxed the underlying economy, however gross it was. But then, look at ancient Greece, where the wealthiest citizens voluntarily funded warships.
Yes, they actually competed to pay the most for the social status.
Was this basically the original Kickstarter reward tier? Like, fund my trireme and get a marble bust in the town square.
That is a great way to put it. It was a pure exchange of social capital. The
Okay.
wealthy managed the projects they funded, lending their expertise and taking personal responsibility.
Oh, so early taxation was often this direct exchange of visible value, not just putting money into some invisible bureaucratic pot.
Exactly. But as empires grow, that invisible pot gets bigger. And trying to fill it leads to some truly absurd policies.
Like the 1700s British Empire. They tried to fund their massive military by taxing hats and clocks.
Yeah, and the logic there is actually about avoiding invasive audits. At the time, probing into someone's personal income was considered, well, socially unacceptable.
Okay, so they couldn't just ask for a W-2.
Right. So the government used expensive hats and timepieces as a proxy. If you owned them, you were assumed to be wealthy, so you owed the tax.
But here's where it gets really interesting. It's the 18th century equivalent of exploiting a loophole.
Oh, absolutely.
If they tax personal clocks, everyone just hides them,
Yeah.
right? And then they just go to the local tavern to check the time on a giant untaxed wall clock.
Yep, that is exactly what happened.
Didn't these laws actually destroy local clockmaking industries rather than raise money?
They really did. The clock and watch tax was repealed after just 9 months because it completely devastated the industry. It put people out of work and generated almost no revenue.
Because it completely ignored how humans actually behave when cornered by a tax.
Exactly. And ignoring human behavior, like the British overtaxing the American colonies, sparked the American Revolution, which makes it kind of ironic that we ended up with our own modern tax labyrinth.
Yeah, the federal income tax didn't stick permanently until the 16th Amendment in 1913, right?
Right, and that created the Internal Revenue Code, or IRC. Today, the code is roughly 2,600 pages long, and that is before you even count the regulations and court precedents.
And those 2,600 pages are wild. I mean, the IRC requires you to report income from babysitting, fantasy football, and even bribes or illegal drug deals.
Yeah, the IRC explicitly taxes income from whatever source derived. If a criminal enterprise turns a profit, the law states that is taxable self-employment income.
Okay, let's unpack this. How on earth does the IRS enforce a tax on a cartel? Are they sending auditors into a trap house?
Well, no, they don't have to. It's the Al Capone method.
Ah, right.
Criminals usually can't hide a lavish lifestyle. By requiring illegal income to be reported, the IRS creates a backdoor to prosecute them for tax evasion when law enforcement can't nail them for the underlying crime.
That is actually genius.
It is. But for the rest of us, though, the reality is entirely mundane. The overall audit rate is only about 0.38%.
That is incredibly low.
Yeah, and the vast majority of those are literally just automated letters sent by a computer that noticed your W-2 doesn't match what you typed in.
Okay, well, that makes me feel slightly better. But if the IRS is pulling in revenue from every conceivable source, even legal ones, that invisible pot we talked about earlier is now a multi-trillion-dollar vault.
A very big vault.
So who decides how that actually gets emptied?
Well, under the Congressional Budget Act, the money is broadly split into two categories. Mandatory spending, like Social Security and Medicare, is locked in by existing law and must be funded.
Okay, so that money is already spoken for.
Exactly. Then there's discretionary spending, which Congress debates every single year.
Wait, if mandatory spending is already locked in, Congress is basically spending all year fighting over the leftover discretionary scraps. What are they actually prioritizing with that?
Well, most of it goes to defense and transportation, but if you comb through the budget, you'll find some highly unconventional uses of your tax dollars.
Oh, I bet. Like, what?
For example, a $700,000 National Institutes of Health grant was once used to study the effects of nicotine addiction in zebrafish.
Wait, really? Zebrafish?
Yes, zebrafish.
I guess expanding empires need a lot of things, and occasionally that include buying cigarettes for zebrafish.
Currently so.
Taxes really have always been the invisible hand-shaping society, dictating behavior from ancient Rome to today, which leaves you with one final, provocative thought to mull over.
Let's hear it.
If the IRS legally requires criminals to report their illicit profits as taxable self-employment income, could a bank robber technically try to write off their getaway car as legitimate business expense?